3 weeks ago, I noticed something in a data set that I almost scrolled past. A number on the Binance Reserve Wallet Transparency Report had changed. Not by a little, by a lot. So I opened a spreadsheet and started tracking it day by day, then week by week, and what I found pulled me into a rabbit hole that I have not been able to climb out of since. If you own Bitcoin, if you hold crypto mining stocks, if you have been watching the price crash and wondering whether you made a terrible mistake or whether something else entirely is going on, this video is going to answer that question. I am going to walk you through exactly what I found, in the order. I found it so you can see what I saw. And somewhere around the 12-minute mark of this video, you're going to hit a piece of information that will make you pause and rewind. I know because that is exactly what happened to me. It started with one chart. Welcome to Global Bullion Brief. If this analysis opens your eyes to something the mainstream missed, hit like. It helps the algorithm put this in front of the people who need to see it. Binance, the world's largest cryptocurrency exchange, publishes its proof of reserves data. This is not opinion. This is not analysis. It is not some guy on the internet guessing. This is the exchange itself, reporting how many Bitcoin are sitting in its wallets. Real Bitcoin, real addresses, verifiable on-chain numbers that get updated regularly. I went to CryptoQuant, one of the most respected blockchain analytics platforms in the world, and pulled the time series. In mid-December 2025, Binance reported approximately 680,000 Bitcoin in its reserve wallets. The number I saw on February 4th was 412,000 Bitcoin. I stared at it, then I refreshed the page. Same number. So I pulled the previous day 438,000. The day before, that 451,000. The day before, that higher still. I went back day after day after day. Every single entry was smaller than the one before it. Not most days. Not on average. Every single day the number went down. I pulled 6 weeks of data and could not find a single day where reserves increased. That is not a fluctuation. That is not seasonal. That is a one-way door. Bitcoin is walking out of those wallets and not coming back. Let me make sure you actually feel the scale of what I am describing, because numbers without context are just noise. 680,000 Bitcoin to 12,000 Bitcoin in 7 weeks. That is a 39% drawdown. Nearly 40% of the world's largest exchange Bitcoin vanished in less than 2 months. The weekly drain rate is 38,285 Bitcoin. The daily drain is 5,169 Bitcoin. And if you overlay the chart, the angle of decline is getting steeper, not flatter. The drain is accelerating. Now, put that in global context. All centralized exchanges combined hold roughly 2.3 million Bitcoin according to CryptoQuant data. That is 11% of all Bitcoin in existence. Sounds like a lot until you realize that only about 400,000 Bitcoin trades hands globally per day across all exchanges. All exchange reserves cover approximately 5.75 days of global trading volume. Not months, not weeks, days. That is not a cushion, that is fumes. Now, I'm going to do something that none of the articles about this data did. I am going to run the math forward. If the drain rate holds at 38,285 Bitcoin per week, and current Binance reserves are roughly 412,000, according to the latest CryptoQuant data, then you divide 412,000 by 38,285, and you get 10.76 weeks. Call it 11. In 11 weeks at the current rate, Binance Bitcoin reserves hit zero. Not low, not concerning, zero. Empty wallets, nothing left to satisfy withdrawal requests. Now, if you are sitting on Bitcoin or crypto mining stocks right now and you just watched a 35% price crash, I need you to understand what this number means for you. The exchange that processes a huge portion of global Bitcoin trading volume is running out of coins. I am not predicting this will happen. Drain rates can change, Bitcoin can flow back in, but no one in the mainstream financial press is even running this calculation. And that alone tells you something about the quality of the coverage you're getting elsewhere. Now, here is where my research took its first unexpected turn. I wanted to know if this was just a Binance story. Maybe institutional clients are moving Bitcoin to cold storage for tax reasons, and this has nothing to do with anything bigger. That would make sense. Institutions prefer self-custody. Case closed, right? So, I pulled the Coinbase data, and my stomach dropped. Coinbase is the main regulated Bitcoin exchange in the United States. publicly traded, compliant with every regulatory requirement. It is where institutions and retail investors store Bitcoin, and theoretically you can withdraw any time. According to data reported by CryptoQuant and confirmed by multiple on-chain analytics firms, Coinbase Bitcoin reserves dropped to 890,000 Bitcoin in late January 2026. That is the lowest level since March 2024, a 187,000 Bitcoin draw down from its recent peak. But here is what really caught my attention. According to detailed analysis from Glassnode, Coinbase has been seeing major outflows since September 2025. Not just retail withdrawals, institutional-sized movements. 10,000 Bitcoin, 20,000 Bitcoin, 50,000 Bitcoin at a time. Addresses moving Bitcoin to cold storage that never comes back. And here's the critical part. The exchange is not seeing equivalent inflows. New Bitcoin deposits are minimal. They are simply watching reserves drain month after month. It is like a bank watching deposits walk out the door, and no new deposits coming in to replace them. So it is not just Binance. Coinbase is draining too. Two of the three largest Bitcoin exchanges in the world are losing coins at the same time. At that point in my research, I did not want to check the third, because I already suspected what I would find. I went to the Kraken data. Kraken operates one of the oldest and most respected cryptocurrency exchanges, and according to analysis published by CryptoQuant and multiple blockchain researchers, Kraken's reserves have collapsed to what one source described as the lowest level in the exchange's history. According to a detailed report on CoinDesk, for the first time in modern crypto history, all three major transparent Bitcoin exchanges, Binance, Coinbase, and Kraken, are draining at the same time at record speed. The report estimates that nearly 500,000 Bitcoin have vanished from visible exchange wallets since October 2025. Now stop. I need you to hold those three facts together. Binance draining, Coinbase draining, Kraken draining, same direction, same time, same asset. There is no historical precedent for this. If this were happening to dollars in the banking system, it would be the lead story on every financial network in the world. If this were happening to gold in central bank vaults, emergency G7 meetings would be scheduled by Friday. But it is Bitcoin, so you are hearing about it from me at midnight on YouTube instead of from the front page of Bloomberg. And honestly, that is part of the story too. So, the next question is obvious, and it is the one that kept me digging until 3 in the morning. Who is taking the Bitcoin? Because Bitcoin does not evaporate. It does not dissolve. When it leaves an exchange wallet, it goes somewhere. Someone signed a transaction. Someone controls those private keys. Someone has those coins. And whoever it is, they are doing it simultaneously across 3 continents. Let me tell you what I found on the Coinbase side. And I want to be honest about what is confirmed on-chain data and what is my inference. On January 7th, 2026, a single day of Coinbase outflows moved 48,000 Bitcoin. According to detailed analysis from Arkham Intelligence, the Bitcoin went to institutional custody addresses, cold storage, multi-signature wallets, not retail, not day traders, institutions. But here's what broke my brain. After that massive withdrawal, you would expect the trend to stabilize. Demand satisfied, institutions topped up, outflows declining. That is how normal withdrawal patterns work. But that is not what happened. The outflows continued. New withdrawals were piling up as fast as the old ones were processed. And according to analysis from Coinmetrics, something even stranger was happening in the background. Large holders were accelerating their withdrawal timeline. Instead of spacing out transfers over weeks, they were pulling everything at once, multiple transactions per day, maximum withdrawal limits being hit repeatedly. In normal markets, people spread out large movements to avoid detection and slippage. Here, they were rushing. They wanted the coins off exchanges sooner, not later. Now, the simplest explanation is that they do not trust the coins will be there if they wait. One analyst quoted by CryptoQuant put it bluntly, "If this is what is happening, the exchanges could end up in big trouble." Now, let me take you back to regulatory developments because while the reserves were draining, something else was happening that changes the entire interpretation of the story. And this is the part where I went from thinking this is interesting to thinking this is deliberate. On January 1st, 2026, the United States Securities and Exchange Commission implemented new custody rules for digital assets. I went to the original SEC announcement and cross-referenced it with Reuters reporting. According to Reuters, the new rule formally elevates Bitcoin custody to the same regulatory scrutiny as securities custody. Let that language register. Same regulatory footing as stocks and bonds. The same category the SEC uses to protect trillions in traditional assets. Under the new rules, only registered custodians with $100 million in insurance, third-party audits, and segregated client accounts are permitted to hold Bitcoin for institutions. According to Bloomberg's analysis, this effectively forces institutional Bitcoin holders to move from unregulated exchanges to qualified custodians. Hundreds of smaller custody providers who had been holding Bitcoin for institutions are now locked out overnight. Galaxy Digital CEO Mike Novogratz responded on his platform X by writing, "This is exactly what we need for institutional adoption." According to Reuters, within days of the announcement, 3 major pension funds contacted Fidelity Digital Assets requesting immediate custody migration. That is how you know a regulation is real. When institutional buyers start calling custodians and accelerating transfer timelines just to comply. The SEC did not ban exchange custody. That would have been too obvious. It did something more effective. It created a compliance requirement so demanding that most institutional Bitcoin has no choice but to leave exchanges and move to cold storage with qualified custodians. Now, follow this timeline with me, because this is where my investigation changed direction entirely. I started mapping the reserve data against the regulatory dates, and a pattern emerged that I was not expecting. October 2025, combined Binance, Coinbase, and Kraken reserves held roughly 1.95 million Bitcoin. That was the starting point. By November 21st, just 51 days later, those same exchanges held 1.68 million Bitcoin. According to CryptoQuant's detailed analysis, 270,000 Bitcoin disappeared in under 2 months. That is 21 billion worth of Bitcoin at current prices. And here is the detail that stuck with me. On November 21st alone, another 18,000 Bitcoin were removed. The price of Bitcoin was falling that day. Not rising, falling. Normally, when price drops, sellers deposit to exchanges to sell and buyers retreat, but someone was pulling more Bitcoin off exchanges on a down day. That is not panic behavior. That is strategic accumulation by someone who does not care about the daily price because they are operating on a completely different timeline. Then something strange happened in December. Binance saw a brief 42,000 Bitcoin inflow, the highest weekly inflow in 9 months. It looked like the drain might be reversing. Some analysts breathed a sigh of relief, but it did not reverse. By mid-January, the drain resumed harder than before, and it has not stopped since. Here's my honest interpretation of this pattern, and I want to be clear. This is me connecting dots, not stating confirmed fact. Institutions briefly moved Bitcoin back to exchanges in December to rebalance portfolios at year-end. Tax loss harvesting, year-end reporting, standard stuff. Then the SEC custody rules went into effect on January 1st, and now the Bitcoin is flowing out again. But this time it cannot come back to unregulated exchanges. It is staying in qualified custody, being moved from exchange wallets, which are visible on-chain, to institutional cold storage, pension fund vaults, sovereign wealth funds. We do not know exactly where, because those addresses are not always labeled. But we know it is leaving the exchange system, and we know it is going to entities that have no intention of trading it. Someone is moving Bitcoin from the public trading pool to the private holding pool in a one-way transfer. Now, while all of this was happening, the only way retail Chinese investors could get Bitcoin exposure was being systematically shut down. China has banned crypto trading for citizens multiple times. No exchanges, no trading platforms. Capital controls prevent moving money out to foreign exchanges. I want to ask you something before I continue. Look at those 4 steps. SEC custody rules, exchange reserve drains, Chinese capital controls, Western price crash. Do you think that sequence is a coincidence, or does it look coordinated to you? Tell me in the comments, because what I'm about to show you next made me pick a side. I want to show you a historical parallel that made this entire investigation click for me, because patterns matter more than predictions. In 2013, China began accumulating Bitcoin at a pace the world had never seen. Exchanges saw massive buying pressure. Prices were still manageable at 200 to 800. Western analysts scratched their heads. Why is there so much buying coming from China? The answer became obvious within 12 months. Chinese investors were front-running their own government's inevitable crackdown. They were buying everything they could at every price they could manage before capital controls made Bitcoin inaccessible. The Bitcoin price did not double. It went from $200 to $100 in a year, a 5x move. And by the time the rest of the world figured out what was happening, it was too late. The Bitcoin was gone, the wallets were filled. And the new price reflected a world where early adopters held the supply and everyone else held regret. Now look at what is happening with Bitcoin in 2026, and tell me if the pattern does not look identical. Exchange reserve drawdowns accelerating. SEC custody rules forcing institutional Bitcoin into cold storage. Chinese capital controls locking citizens out of markets. The paper price suppressed through a combination of liquidations in the West and access restrictions in the East. The playbook is the same, but the stakes are higher, because in 2013, Bitcoin was not simultaneously being considered for strategic reserves by the United States, discussed as legal tender by 12 nations, and about to be formally recognized as a reserve asset by the IMF. Bitcoin has all of that, and the exchange reserves are emptying faster than they ever did in 2013. Now, let me give you the number that ties this entire investigation together. And this is the part I told you about at the beginning, the part that made me pause and rewind my own notes. The SEC custody rules went into effect January 1st. At the current Binance drain rate of 38,285 Bitcoin per week, the reserves approach zero around mid-April. I checked that math 3 times, mid-April. Then I looked at something completely unrelated. The Bitcoin halving is scheduled for April 2026. The supply of new Bitcoin being mined gets cut in half, from 450 Bitcoin per day to 2,5 Bitcoin per day. I looked at the 2 dates side by side. The week the exchange reserves approach critical lows is the same month the Bitcoin supply issuance gets cut in half. I sat back from my screen and did not type anything for about 5 minutes. I did not manufacture that convergence. I did not cherry-pick dates to make a narrative. I ran a drain rate forward on a calculator and checked the halving schedule, and they landed on the same month, April 2026. Exchange reserves approaching critical lows. Bitcoin supply cut in half. The world's largest exchanges running out of available Bitcoin. At the exact moment, new supply gets slashed by 50%. When I saw that, I understood that this story is not just about reserve data. This is about a once-in-a-generation restructuring of who holds Bitcoin, in what form, and under whose rules. Now, let me tell you what this means if you are invested in Bitcoin, because data without implication is just trivia. The paper price, the number you see on your screen, the number that made you sick when it hit $74,000. That price is set by exchanges that are running out of the Bitcoin they need to satisfy that price. Binance approaching critical lows. Coinbase reserves bleeding since September. Kraken at historic lows. When the liquid Bitcoin runs out, the paper price stops being a market price and starts being a fiction. And fictions do not survive contact with the withdrawal request. The question every Bitcoin investor should be asking right now is not, where is the price going this week? It is what happens to price discovery when the exchanges that underpin it are running dry. Because that moment is not theoretical. It is 11 weeks away on the Binance side, and no one on mainstream financial television is even discussing it. There's a line from a crypto quant analysis that I have not been able to get out of my head since I read it. They wrote, and I am paraphrasing to respect their work, that when the last readily available Bitcoin leaves the exchange, the price discovery mechanism shifts from whatever the paper market can bear to whatever it takes to pry the last coin out of private wallets. Read that again, whatever it takes. And every day, the number of Bitcoin between here and that moment gets smaller. Binance is at 412,000 Bitcoin and falling. Coinbase reserves bleeding since September. Kraken at levels analysts describe as the lowest in the exchange's history. The 4-year halving cycle has not reversed, and the world's largest institutions just implemented rules that lock Bitcoin into cold storage permanently. The question is not whether the exchanges will run dry. At this trajectory, the question is which exchange runs dry first. I want to leave you with a question, not an answer, because I think this audience is smart enough to draw their own conclusions, and I would rather arm you with data than opinions. If you were a sovereign wealth fund or pension fund or institutional asset manager, and you knew that Bitcoin had just been given custody rules equivalent to securities, discussed as a strategic reserve by the United States government, and was about to go through its fourth halving, cutting supply in half, and you also knew that exchange reserves were draining at 38,000 Bitcoin per week with no signs of slowing, what would you be doing right now? Would you be selling? Or would you be quietly moving every coin you could get your hands on from a public exchange wallet into private cold storage while the rest of the world watches the paper price and thinks the trade is dead? The on-chain data does not lie. It publishes the numbers every day, and every day the number is smaller than the one before. Bitcoin is not crashing because nobody wants it. Bitcoin is crashing because someone wants all of it, and they need the price low enough to accumulate it before the halving changes everything. If you held through this crash, you are not wrong. You are early to a game that the rest of the world has not figured out yet. The data is on your side. The exchange reserves prove it. And in the next video, I'm going to show you exactly what happens when those reserves approach zero and the paper market collides with on-chain reality. What I found will change how you think about the price you see on your screen. I will keep watching. I will keep tracking every exchange reserve report, every crypto quant data point, every on-chain withdrawal, and when those reserves approach critical lows, I will be here to show you what happens next. 11 weeks, the clock is running. This is not financial advice. This is what the data shows. What you do with it is your decision.